So everybody, we have Shashank Shekhar here. He's from Arcus Lending in Northern California. You're in San Jose, right?
That is correct, yes.
He is the number 19 overall loan officer in the country on Scotsman Guide this year for 2019, excuse me, and number 3 mortgage broker. So how are you dealing with all these changes? I know you said you've been being very proactive, but changes are happening pretty quickly.
They are, and I got in the business in 2008, Anthony, and I tell people that I'd kind of baptism by fire, and so far I've been able to brag that I got in the business in the craziest year that ever could be, and looks like I won't be able to brag that anymore after 2020. But really, as what you're seeing now is something that it has happened much faster. And let me be very, very honest, is that I'm always someone. If you know me, I'm always someone who plans for the future. I kind of, as I said, I'm trying to stay ahead of the market, but nobody has been able to. As in things that happened in the last 4 weeks, what we met at AIME, 5 weeks back, 6 weeks back in Irvine. And as we knew that there's a virus thing there, but we never thought that how it would impact the mortgage market overall. And things that we have seen has been very swift and brutal, so to say. So. And in my case, I have my personal production, and I'm just getting off my best year ever, and looks like we'll probably do the same number this year, if not more. And then I have loan officers across the country. But really, for me, the biggest focus has been is to look ahead. It's like if you're looking right now, if you're, say, refinance being the majority of the business, I was telling my loan officers and myself that I'm locking 45, 60 days, even when the lenders were offering 30 days. I was telling them to lock loans when everybody was floating it, thinking the rates will get even better. I'm telling my team is that the funding could get delayed. The fact that we have VVOEs, because we are non-delegated and for some channels in-house, even though some of our investors are doing it, we're just taking extra precaution and doing it on the day of funding. So all of these things are not really always driven by where the market is today. But it's very important that what's unfolding right now, that we are at least a week or two ahead. I know it's very difficult given the uncertainty there, but if you're able to do that, then we'll do better off than some of our competitors. And really being in the broker business right now is literally worth in gold. If I'm talking to people who are quoting 4.5 with 2 discount points, and I'm here, I just locked this morning 3.25 with like 2 points rebate or whatever it is. It's just crazy the kind of pricing differential that you're getting. And more importantly than the pricing differential itself, the fact that you still have products to sell. As in if lender A is not offering it, you can go to lender B. And if they're not offering it, go to lender C. That kind of flexibility in a market like this is completely priceless. It's unbeatable.
Yeah, I think that's a really great point because the last couple of weeks we've obviously seen a lot of loan officers come into the broker channel over the last 18 months,
yes.
and a lot of those loan officers have sort of taken an approach where they do a majority of their business with one lender, and they don't really broker technically. They'll probably do 80 or 90% of their business with one lender and do a little bit here and there with other lenders. And there's been a forced adoption right now for everybody to truly be a broker because UWM has from a pricing perspective been out in certain areas, and the reality of the situation is like now's where we sharpen our skills because you have to know where to go with loans right now. It's not like everybody's doing down to 640 government. Some lenders are at 660, some lenders are at 680. You really have to know, and it's not just a loan sifter thing. It's really truly a guidelines expertise that you have to be able to have. So for you, you've adjusted your process for that. How are you dealing with like the actual guideline changes itself?
So so first of all, first part of the conversation, which is that yes, you have to be a true broker. I know that UWM is extremely easy to work with, and so I don't blame some of the brokers that they had 80-90% of the business going to UWM, because when you have it this easy, why take the harder way out when you can do it that easy? But in a market like this, you have to be open to that. That's what being a broker is all about. Is that if you have 20 investors, then you should be open to sending it to at least 10. And Loan Sifter, of course, has not been able to keep up in terms of pricing. That's another lesson that I've learned, is that we have about 40, 50 investors who work with. All of them are changing pricing 3 times a day. Loan Sifter just can't keep up. So every loan you have to price the scenario on Loan Sifter and then double check on the lender's website. So those two things are very important. In terms of keeping up with the guidelines, I have always been a guideline person. As I'm proud of the fact that in 10, 11 years of doing business, I haven't had one loan decline in underwriting, which was related to credit, is because of the due diligence that I do upfront on my files, even with that kind of volume. So I have been reading, Anthony, literally, I've been spending 2 hours a day, every day since the crisis unfolded, in terms of watching videos, reading articles, even stuff which may not be directly mortgage related, reading guidelines, reading updates, and then taking all that and passing on to the team. If you'll ask my team, they will tell you how much of updates they're getting on a daily and a weekly basis. And of course, I'm digesting that information myself. But very important again to stay ahead of the curve, and you can be 3 days late into the fact that the FHA has moved to 640 with a certain investor. And so it's more than important that you keep that time on the side, whether it's at 11 p.m. in the night when your kids are asleep or whenever you want to do it. But you have to be ahead of the game. You have to know where the guidelines are and where they are moving in terms of figuring out what to do with your loans.
Yeah, and I also think to a degree, I don't want to say common sense, but you do have to apply a little bit of common sense. Like this week, I was telling you before we got on here, I got a message a little while ago, and this is not fun, and I don't want to make fun of anybody, and I'm not, trying to be tough on anybody, but we do have to use some common sense. If you have a, customer that is currently out of work, they might be employed, but they're not able to work and they're in the service business. You're not going to be able to get a loan done for them right now. And the specific case that I just had, a loan officer reach out to me on, the borrower was a hairdresser, and in the state that they're in, they issued a shelter in place. So now she can't work. And obviously that's going to hurt their income. So, these are things that we can't take personal. We have to be realistic and say, eventually they're going to go back to work. Eventually this is going to not be a thing anymore. And rates are going to wait around for us. From all indications from Barry and all the people we rely on for rate information, they're telling us that we're going to have low rates for quite some time. So when it comes to setting expectations, because I know you do like to really make sure that you're, in control of your process with your customers, how do you go about making sure that you're, adjusting your expectation setting based upon what's happening in the environment?
So the thing about mortgages, there are several parties depending on whether you're doing a purchase or refi. I'll give you an example. I got a lead today. One of my clients' brother is in Washington. He's closing on a deal, and they're closing on April 30th. I can still close on April 30th, and I could have just taken the deal and said, "That's fine. Here's my code, and let's go ahead." But my email to him was that, look, given everything that's going on, we control a lot of processes at our end, but with everyone working remotely, all the shutdown in place, appraisers difficult to find, title companies shut down, recording companies, as in recording counties, are not open. Given all of that, I need you to check with your agent now whether you can get 2 to 3 weeks extension before we started. So it's like setting expectation at the beginning, not even during the process. In fact, we locked, I don't remember, but probably 80 loans on the first 2 or 3 days when the rates went down. And I emailed to all of them saying that, hey, I know your rates are locked, but I can't guarantee when will this close and how will this close, given all the uncertainty that's happening. So I crafted a 3-paragraph email, sent it to everyone, and 90% of them came back saying, as in, I totally understand, and thank you for letting me know in the beginning that this is how it's going to play out. So I think we fear loss of business a lot. And it's like, for example, the hairdresser that you gave, the example that you gave, is like, I, as a loan officer, shouldn't just be thinking, let me just close it and whatever happens to the loan happens afterwards. There could be a buyback on this, either for your company or the lender that closed on this. And so we need to look at the industry overall here and not just be selfish now, because those people will come back to you. As in, if you do good to them, if they don't have a job today, there's no reason why you should be pushing a mortgage to them right now when you can do that later. So if you have right expectations and not just thinking about a short-term gain, a benefit for yourself, and just for a second think about industry as a whole, I think we'll get through it and we'll do much better in a few months.
Yeah, that really is a great perspective, and I know people will be watching this and they're going to say, "Oh, it's easy for Anthony to say, it's easy for Shashank to say." The guy just closed 235 million, but the truth is, like, the reality is, having our business here for the long haul is very important. If you went through 2008, and I just remember, you Taylor Bean and Whitaker and Walker Jackson, Wells Fargo. I mean, on a routine basis, lenders left us, and you and I were in the business during that period of time, and I remember how unbelievably not in control I felt for a period of time where my investors were Provident, and Provident was way more tough on brokers back then than they are today. I was working with Fifth Third was a company that we worked with, and at one point they had a 90-day turn time on initial underwrites. 90 days on initial underwrites. So like that was only, we're talking, it's 2020. That was only 8-9 years ago that, no, that was only like 7 years ago that was the deal. And the game's kind of changed over the last couple of years with UWM's emergence and sort of everybody competing on service the way that they have. But I do fear that people don't realize how good we've had it and how important it is to like take care of our lenders. And it's like, listen, there's got to be balance, but at the same time, this early default situation is going to be something we're going to be dealing with, because we all have broker agreements, and our broker agreements say that if the borrower doesn't make one of their first 3 payments, we're subject to pay back our EPO. So, right now I see brokers out there just saying, "Hey, borrower asked me about forbearance." I said, "Yeah, just call the lender." Well, guess what? If that's one of their first 3 payments, you're going to have repercussions. So it's really important that we're taking a look at it and saying, "Hey, maybe should I close this loan right now? Because if this person loses their job, or if they're in the service business and a shelter in place puts them out, do I want to expose myself to losing my commission?"
No,
so,
absolutely.
Can you talk about that?
So what I was saying, I was talking to my team and I was telling them same thing, is that you need to be a constant conversation, not just at the time of taking application, but literally pretty much every week saying, "Hey, how is your job situation going? Like, how's it, whether they're W-2 or self-employed or service industry, wherever they are, just have that conversation on a regular basis so that we are not, again, blindsided at the time of closing saying, "Hey, but I just lost my job and still signed a loan application," or whatever. Closing. So it's very important to have that communication channel throughout.
Now, with all, obviously, I know you had a record year last year. How, with your first quarter, what percentage are you purchase refi?
So last year, if you look at the broker ranking, I think I'm the only one in the top 20, 25 who had like 68% of purchase versus 32% of refi, which is kind of crazy. Most of them are leaning towards refinance, which is expected given the kind of year it was. And we started again strong in Jan, Feb, but purchase has literally almost come to zero. So we have single-digit purchase right now. The contracts that we had, a few of them canceled. The pre-approvals are not going into contract right now. And we are in Silicon Valley, where we are usually the last one to see the impact of all of this in the sense of job losses and everything else, unless it's like a tech fallout like 2000. We will probably be the last one to see it. There are tons of companies which have already come out saying that they will not lay off people for the first 90 days, and then they will wait and watch after that. Visa actually came out yesterday, said they won't lay off people in the entire year of 2020. So some of those people would not be losing job, but still, it's the fact that nobody wants to buy now because people know that the real estate prices will fall. That's the first reaction that everybody has, and says, "Why should I be buying a home for $1 million right now, which I potentially could be buying for 900 later?" Not to mention that a ton of these employees get their compensation through stock options, and given the fact that we are 20-25% off in S&P is, and nobody really wants to sell these stocks right now. So the challenge to purchase business, I think, will be longer. We might see this extend almost through this entire year of 2020, and we need to be prepared for that. But there is refinance business to be had. One of the things that I like being in the mortgage side of the business and not on the real estate is that in a market like this, when the purchase business dries down, you have all that refinance to go back to. If you're on the real estate side, as you only have people who are buying or selling, and then if that dries down, you really have nothing to fall back on. So again, we should just like the way I was saying is that you should be thankful that you're a broker right now. You should be thankful you're on the mortgage side of it, where even in a crisis like this, you can still make it could still be your best year ever.
You're 100% correct, and that's the truth. Is there's a lot of companies out there that are strictly just purchase, purchase, purchase. The reality is purchase is not gonna. I mean, until this thing is really worked itself out, we're going to see massive drop in purchase business, and then on the other side of that, there's implications because the truth is our summer season, our busy purchase season is what sets values for usually the whole year.
Yes.
So, with slow home sales, that's going to have a big impact on home prices. It's going to have a big impact on value. So right now, specifically focusing on refining your business and while the values are where they're at, getting your past customers done is going to be important now more than ever, to be honest with you. How do you, as far as from a management standpoint, guide your team to take this type of philosophy when it comes to I don't want to say pivoting, but focusing on what business they should be going after?
No, and it is both a pivot and of course a change of focus. But really, as a leader, it's very important that you see the direction of the wind and then guide your team for that. I have always said that if you're just taking a certain portion of your loan officer's commission just because you have license or just because you run a company, that's just not fair. This is the time when the leadership rises. This is the time when you guide your team into, because they're looking up to you. So if you're a leader in the industry, if you close $200 million, that's why probably they joined your company. And I don't care whether you did 10 million or whatever that number is, but if you are the leader of the company, and irrespective of the size of your company, they are looking up to you for direction. They're saying, okay, I can't make a sense of this. Even if you were in 2008 and saw everything, this is shaping up to be very different. Just the speed of change here and the speed of slide has been so much faster than what it was in 2008. I came to this country in 2006, and I could slowly start seeing the decline from that period to what we saw into the big implosion of 2008, 2009. Here, all of that has happened in like 4 weeks.
Yeah.
It's like what we had seen through probably almost 30, 40 months is what you could see in like 4 to 6 weeks. So with that craziness, it's really important that you are having that communication. And if you do not understand what's happening, then look up to the leaders and of the industry. And that's why AIME has calls like this, is that you learn from this, you take that conversation and take it back to the team. Not everything that I'm telling my team is something that I've figured out myself. As in, I have watched Anthony's videos and Barry's and KP's and all the other leaders in the industry. So I have my own perspective, but I also have perspectives from these people, which I then combine and then transfer that information to my loan officers, who are then taking that and then still doing a great job. And they're less uncertain. They are much more focused because they know that I am taking care of all of that for them. They don't have to be out there looking for this information and trying to make a sense out of this.
I think that's a really good point, is being able to learn from people that are experts, and whether it's interviews like this with Shashank, who, listen, it doesn't matter if you are doing $100 million a year in production or you're doing $20 million a year in production. Anytime you are communicating with somebody that is one of the best of their craft, if you're top 100 in your craft, you're amazing. Shashank's obviously top 20, which is also amazing. It's important to actually sit there and not be multitasking, not be, if you can't actually focus on the information, then come back and watch it later. But what our focus has been is how do we bring not just, people that, are talking about current relevant headlines, but how do we bring experts that can actually educate the broker community on what's really going on and understanding what capital markets are and understanding, what, bulges are with warehouse lines and why warehouse lines are being impacted right now and all these different things. It's important to learn it because, going back to your client and being able to truly tell them what's going on will put you in a position where you are the expert. You're the person that they rely on to set these expectations. They want to have confidence in their loan officer. So that would be the biggest thing, is when I see that, we've put out a certain amount of content, Barry's done what he's doing, and I still see the same questions about certain topics. it's one of those things where it's almost like, what's going on here, guys? How have you not picked up on this whole situation? It's been the headline. It's all we've been talking about.
No, just 6 weeks back, as in if you were to ask me about MSR valuation and margin calls and why do the Ginnie Mae servicers have to front the payment even when they don't get it? I had no clue about any of that stuff because I never needed it. That wasn't required to do my jobs properly. But now that I need to understand where the industry is going and how all of this impacts, as in all the videos that I said, as in I'm probably setting aside 2 hours a day just to study these things, and videos from, as in, people like you and conversations and everything. And now I'm at a point where I can actually educate my clients, or because they look at from the outside, and I tell them, look, the mortgage industry, the way it looks from outside right now is very different than what we are seeing it inside. Because they're like, all they're hearing is, oh, the rates are going down. The Fed has cut the rates. That's all they did. They're quantitative easing, and they're buying $1 trillion of mortgage-backed securities. And so every second day you will get an email, oh, I'm hearing the rates are even lower. And then you have to explain them. And some of my friends went to some of the best business schools in the country, and I have to explain them the same thing. So look, what you're hearing, this is not how it works. This is how, and once you explain it to them, then they get it. But if you do not have that information, then you're just defending yourself. No, I don't see those rates in my rate sheet. That's all the answer that you have, instead of actually explaining what is happening, because then they're not going to go to lender B shopping for rates. They will stick with you because you explained it to them, and then you tell them, hey, come back to me after 4 weeks. It might settle down in 4 to 6 weeks, and we can relook at it. And you will see those clients come back to you versus, say, going to someone else saying that Shashank made no sense. All he is saying is that all I'm hearing is that rates are down, and all he is saying is that the rates are not down. That's all his counter to this thing is. So this is very, very important, guys. I've been creating more content in the last 6 weeks. I've been writing more blogs, more videos, doing interviews like this, more than probably my entire 2019 combined, is because this is the point. This is the time when they should be getting news from you and not CNBC or CNN or Fox, which half of their experts, so-called experts, really don't understand how mortgage markets work internally the way we see it. So if they are getting the news from them, then you will have problems, because then you will not be able to defend what they're saying. But if they are getting the news from you, then you're not just considered an expert in this market. They will stick with you, and they're not going to go anywhere, and they'll wait for the rates to fall down again, and they'll come back to you.
Yeah, I think that's exactly correct. And you've been doing a great job. Your content's been wonderful. Being the person that translates what the market is saying to your audience, and your audience is consumers, it's your social network, it's your sphere of influence, it's your realtors, it's your title agents. Being the person that's sitting there and explaining exactly the way Barry explains things to us, we need to take that information and create our own presentation to customers. And like, as things happen, like this VOE announcement, a lot of people sit there and they spew about it, like they're frustrated about having to do this. Then I see some people that are like on their game, and like I saw loan officers putting videos out the next day. Hey, talking to the realtors, talking to customers. This is what's going on. We know you're pre-approved, but guess what? The pre-approval is not going to work if you're out of work. And that's the importance of just simply saying, like, hey, credit score requirements are going up. You need to talk to Sam Parker at Get Healthy Credit. We have to figure out how to get your credit score up. Again, these are all things that go into being an expert. And the only thing I can say is that this last 8 years, or now maybe it's the last 6 years, because it's gotten so easy, I feel like loan officers have gotten lazy. And like, to me, like right now, it's just an incredible opportunity to be an expert and actually get your hands dirty and be able to, win a lot of real estate agent relationships. Obviously, purchasing going to be prevalent right now specifically. But by being the expert and being the leader, you're going to get a lot of exposure to people that you might not have in a normal market.
No, but even if, as you said, that the purchase market may not be big in 2020, and it may not be an immediate plan for you to do that. But really think about picking up the phone and talking to your real estate agents right now. How many loan officers do you think who are doing it? Just educating them, because they don't know what's happening right now. Just telling them, hey, this is what I am hearing from experts and leaders in my industry. This is where we think we are heading. It may be a tough 6 months, but that's fine. In the business, you always need to have, especially in a market like this, you need to have your next 2 weeks plan and next 4 weeks plan. That's fine. But that does not mean that you take your eyes off the next 6 months plan, the next 6 years plan. As in, We always talk about the fact that you're sitting in 2020, but you're still also keeping an eye on 2021 and 2022. If that's the case, if you're in conversation with real estate agents right now, and we have time, as in I know we have big pipeline and everything, but we are working from home. Rates have climbed up a little bit, so the locks have slowed down a little bit. This is the time to reach out to them. You're not asking them for business because probably they don't have business right now, but just the fact that you reached out to them and educated them while nobody else was, when the market does come back, and guess who they would be working with? You. So this is actually a great time to take market share, both in terms of content creation, keeping all the parties informed, and staying in touch with your real estate agents.
Yeah, and I would say the last thing is as new products become available, this is a time where the real estate agents are going to they're gonna be losing a lot of at bats. So the ability to create some at bats for them, whether it's fix and flip loans, just all the product optionality that we have, whatever it is, if you can help them create one client or create one opportunity, it really is something that's meaningful. And the other thing that's going to happen is you're going to have a lot of rental properties start to hit the market here because people aren't getting their cash flow, people are not getting rental income right now, and they're going to try to sell what they can. And that will be, again, another opportunity for the real estate agents. So more than anything, I think it's creating content, being the expert. Quality is a big deal, and you've really taken your content to. I mean, it's really obviously in 2020, but on a whole nother level. How much time did you, or what was the process in kind of making the transition that you made to create this content?
So, my focus on content has been since 2009. If you know my story, as in I got in the business when I knew no one in the country, literally 3 people in the entire country, and kind of struggled for the first 12 months, as in partly because it was 2008, but also because I didn't know anyone. So I did half a loan a month for the first 12, 18 months, like 7 loans in the first 12 months. And that's why, like when you pointed out saying it's easy for Shashank to say that, at 235 million, you let a loan go. Because at that kind of production, of course, you can let a loan go. As in, I have let the loan go from day one when I was doing half a loan a month. Even then, it was about the client, it was about the industry, it was about the long term. But really, 2009, I started blogging, and I saw one of the questions saying, "Hey, where is your blog?" It's mortgageblog.com. It's probably the easiest URL for you to know. So mortgageblog.com, and feel free to share. There are probably 600 blogs there, which I've written since 2009. And really, again, taking a lot of what, say, for example, Barry is saying or MBS Highway is saying, but breaking it down where the consumers can understand. Because Barry speaks in the loan officer's language. Our job is to break it down where the consumers can understand it. In fact, just this morning, I took almost two hours in the morning to write my first blog post for Medium, which is considered as in only the best bloggers in the world right there. So I'm a little scared, but we'll see. I'll post it tomorrow, and I'll probably post a link. We'll post a link in the group. It's about how coronavirus is impacting everything, but it's a long post. But yeah, a lot of focus into breaking it down. I think it's very important is that we take that language, what we are getting from everywhere, and say what this means for you, and then we translate it for how the consumers are seeing it. Because I'm seeing a lot of content on social media, which is great, by the way, for all of you are doing it. Just make sure that you're doing it for the consumers. You're not trying to get likes from fellow mortgage loan officers, because
exactly.
Unless you're trying to address them, it's fine. Because, for example, I saw a lot of people saying, hey, the conforming loan balance went to $510,000. And I see the comments under that saying, what does that mean for me? It's
right.
like, okay, I'm not trying to be breaking news for other loan officers unless you are. If you're trying to address the consumer, then you should say that means you can borrow more, or that means you can buy a $530,000 house with only 3% down. So you need to break it down into what it means for the consumers, because these news about margin calls and MSR valuation means nothing to them. It means a lot to us, but they don't understand what's going on and all of that stuff. So creating any kind of content, if you're creating it for consumers, even real estate agents, because they, of course, don't know about any of this stuff.
They're basically consumers too. You got to treat them like consumers.
Exactly. Because they also say when the Fed drops it to 0, the mortgage rate should be 0. So
those are great points. I think that the message is know who your audience is. Like, for me, I'm obviously running a trade association for mortgage brokers, so I'm talking B2B to brokers. But the reality is, like, your audience is either consumers or real estate agents. And the one thing we know about real estate agents is like I've seen some of the emails that have gone out to agents from NAR and from their state chapters that really present, a lack of education around things like forbearance and, like you said, 0% interest rates and all that stuff. So, if we're not being the expert, if we're not out there leading, they're going to be led by somebody else that's not going to inform them. So that is the opportunity. So we're already over a half hour, Shashank. One big piece of information, one big recommendation, if you could say one thing to the brokers looking forward at the environment that we're currently in, the opportunity that's ahead of us, some of the challenges of being a loan officer right now, what would you recommend to everyone out there?
I think refinance presents a huge opportunity to all the brokers out there, and especially it does present opportunity to the entire industry, but more so to the brokers, just given the fact of the diversity of investors that we have and their different appetite in terms of taking different kinds of pricing on different days. I think that's an opportunity which is going to be huge, given the fact that price competitiveness plays even more role in a market like this when it's refinance focused. So everything that I've said during the entire conversation is that remaining in touch with all the parties, whether they're real estate agents or your consumer like direct database or your sphere of influence. If you remain in touch with them, communicate with them, you be the source of news and send them weekly newsletter if you have to do that. Whether it's through videos or text or whatever works for you. Something as inexpensive and cheap as MailChimp is something that you can use for like $15, $20 a month. You could do as many mass email campaigns that you can do. Again, don't focus too much on technology per se, but your strategy. I always say that it starts with the mindset in terms of do you have that mindset to execute it? Then it's the strategy, and then it's the tools. Don't inverse it where thinking about what tools should I be using, and then thinking about what I want to do, and then you don't even have the mindset to execute on it. So tools are the last thing. There are hundreds and thousands of tools for you to go to, but really staying in touch with them, be the news source, create the content. A ton of consumers are glued on social media and web right now. This is the time to create content for you to get way more exposure than what you'd have gotten before. So come out of this market as stronger. There's huge opportunity for you to do that. Maybe not with purchase market, but with everything else.
Absolutely. Shashank, thank you very much. Congratulations on a record year last year. We know you're going to do it again this year. And we appreciate you taking the time to help your fellow brokers.
Thank you. Anytime, Anthony.
Thank you, sir. Have a good day.